Welcome to this video presentation. My name is Peter Nilsson and I'm the CEO of Kitron. The backdrop to this presentation is this. When I joined Kitron in 2014, we sat down and discussed new strategies and new targets. These were presented to the investment community almost 2 years ago in February of 2016. I'm here today with my team to give you an update on the progress of those strategies and where we're heading in the future. But before we get to the scorecard, let me tell you a little bit more about Kitron. Kitron is an electronics manufacturing services company. Basically, this means we support our customers from the design of their electronic product until the end of life and beyond, often with redesign, repair, overhaul, and maintenance of their products. As you might guess, we are not alone in this industry. There are global giants with much of their manufacturing in Asia. They tend to focus on a little bit less complex products in very high volumes. On the other hand of the scale, there are small, fragmented, local players. What we do is take on more complex, more high requirement, more high margin type of products. We do this in a higher volume, which lets us compete more effectively against local niche providers. Here you see the 5 market sectors that we focus on, as well as some of our customers. As you can see, many of these are well-known brands, and in general, they operate within markets with unusually strict requirements, whether they produce medical devices or fighter jets. Now, after this brief introduction to Kitron, let us look at what we've accomplished over the past years. And let's start with operations. First of all, we have completely modernized our main production facilities in Lithuania, Norway, and in Sweden. We've also doubled our electronic manufacturing capacity in China. And last year, we installed electronic manufacturing capability in our plant in the United States. Our facilities are now very, very competitive. Secondly, we've been running a program of continuous operational improvement, and that is translated into the financial figures you will see later. Thirdly, a business like ours is part of a complex supply chain, and streamlining this chain is a critical success factor. Now we have a much larger share of our supply from a small group of preferred partners that we work very closely with. Lastly, we have a larger proportion of our workforce in lower cost countries, and today have a more optimal division of labor among our factories. These operational changes translate into better financial numbers. Firstly, our top line has grown from 1.75 billion NOK to more than 2.4 billion NOK, or about 40%. When we combine this with streamlining and cost control, we improve our margins, and our operating margin has gone from below 2% to above 6%. The operational improvements and increased shareholder focus has not been lost on the investment community. The Kitron share price has increased more than 300% since the end of 2014. We have made a lot of progress. Now let's try to look ahead, starting with an overview of our core market, the European EMS market. Kitron has grown substantially, but the truth is that the overall EMS market has been lackluster over the past years. As you may have noticed, European economies have picked up steam. Business confidence and indicators of manufacturing activity are historically strong. This, naturally, spills over to the EMS market, which is expected to show steady growth going forward. Now, let us briefly look at Kitron's market sectors, starting with energy and telecoms. This is a sector that is driven by the increasing smartness of power networks. Kitron is uniquely positioned in this market, with customers in power distribution and smart meters. In our forecast, this accounts for almost 20% of total revenue in 2020. Defense and aerospace is a market with some very specific requirements, and one of Kitron's strengths. We are particularly strong within avionics, communications, weapon control systems, surveillance, and radar systems. Here we primarily see growth coming from 2019 and forwards, and in 2020 we see about a quarter of our revenue coming from this sector. The third market sector is medical devices, where we are strong within ultrasound and cardiology systems, respiratory ventilators, blood analysis systems, and radiology systems. We expect to grow about in line with the market, maybe 3% per year. But as a percentage of Kitron's revenue, medical devices may decline to about 15% in 2020. Industry is growing rapidly and is expected to continue doing so. Key products are vehicle control systems, electronic control units, control processing units, and drivers and servos for robotics. Production is mainly done in Lithuania and China, and we expect this to be about 40% of our revenue in 2020. Now lastly, marine and offshore. This used to be a substantial market sector for Kitron, focused on the Norwegian offshore industry. But after the oil price fall in 2014, this market more or less collapsed, and so did our revenue. While industry analysts have now called a bottom in the investment cycle and are predicting growth, we do not currently see any substantial growth for Kitron. That said, we are in talks with potential customers, and there is a clear upside potential here when investments pick up again. But for the time being, we only see a couple of percent of our 2020 revenue coming from this market sector. Summing up, the total growth we see in our market sectors indicates that we should expand capacity in Eastern Europe. Above all, this is driven by the industry market sector, where we see strong growth going forward, both within the 2020 strategy period and beyond. This builds on the success and growth we've had with our Lithuanian operations. After this overview, I'd like to hand the word over to our COO, Israel, who will give us an update on our operations.
My name is Israel Lusada, and I am Kitron's COO. Today, I'm going to be talking about our operations. Kitron is a true global player. Facilities in 5 countries and 3 continents. We have a strong customer presence in Scandinavia and a growing customer demand in Europe, United States and Asia. Kitron has 55,000 square meters of manufacturing footprint and 16 SMT lines for electronics assembly. We have acquired the latest technology, and in some cases, like with augmented reality, we are creating it ourselves. Today, we have about 1,500 employees, including around 100 engineers. So this is a complex operation, but for this brief presentation, I would like to focus on 3 important elements: innovation, automation, and operational excellence. When it comes to innovation, I will talk specifically about augmented reality. Augmented reality is the ability to add digitally created images into the real world. Augmented reality work instructions cannot be hidden or forgotten in a drawer. They are constantly in front of the operator, contributing to a clear improvement in the quality of the assembly. Kitron will start using ARC in a live environment in 2018. Once the application has been thoroughly tested, we will explore the possibility to commercialize it. To take full advantage of the instructions created using ARC, Kitron has also been developing an augmented reality workstation. Our objective has been to define a simple, robust, and cost-effective workstation that can be used by any operator from day one. The ARC workstation has functionalities that we have yet to see anywhere else. It will provide operators with a remote assistance feature. We connect the operator on the production floor on one continent with engineers in another and the R&D team in a third. The operator will be able to share the live feed from his workstation with the engineer and the R&D team. This feature is of a special interest when introducing new products or when testing and troubleshooting. In summary, we are positioning ourselves at the forefront in the use of augmented reality in a manufacturing environment. And now, let's talk about what Kitron is doing in the areas of automation and robotics. Kitron has been working on developing intelligent factories. In our factories, machines and products communicate with each other. In not too long, we want to make it possible for products to find their way independently through the production process. At Kitron's facilities, data is generated in every step of the manufacturing process, providing our team with an accurate overview of what's happening in every work center. Moreover, customer design teams located on the other side of the world have access to real-time data from a series of connected robots and machines, reducing the time to market. A key element in Kitron's intelligent factories is the collaborative robots we have invested in. These are devices that operators can interact with. They are being taught how to do things rather than being programmed. They are safe to be around and they are price competitive. A good example of Kitron's commitment to creating smart factories is the fully automated line recently installed in our plant in Lithuania. With an investment of close to 30 million kronas, this line turns hundreds of thousands of units from raw material into final product without any human having to touch them. There is still a lot left to be done, but we are certain to be on the right track to achieve a highly flexible, individualized, and resource-friendly production while increasing Kitron's competitiveness. We have been able to reduce our cost. We have been able to quickly introduce new products, reducing the time to market for our customers. We have been able to ramp up to meet sudden increases in demand from our customers. We have reduced even further the number and frequency of quality incidents. We will continue training our labor force to multiply the number of small improvement projects driven and managed by our operators. This is one of the core principles of our program. Operational excellence is not something that you do in addition to your job. It is the way you do your job. All in all, Kitron is well placed to succeed in an environment where the introduction of new technology and striving to do better is the definition of success. And now, our CFO, Catherine, will be talking to you about the numbers.
Good morning. My name is Catherine Nylander. I am the CFO of Kitron, and I will take us through the numbers today. Starting with the top line. In 2016, we outlined a growth path of 10% per year, bringing us to 3 billion NOK in 2020. We are definitely on the right path. There will be variations around the 10% trend. Growth in 2017 was stronger, but we still see this as a good long-term path. Given where we are now, we are increasingly confident that we will reach 3 billion NOK in 2020. And we do see some upside potential above this target. Our order backlog also grew a robust 28% in 2017, increasing our confidence moving forward. We are now extending our focus period beyond 2020 until 2025 and are looking at our activities to maintain our current growth path through this period. Moving on to our operating margin. Here we set a target of 7% in 2020. Keeping in mind that ours is not a high margin industry, this is an ambitious target, but we are on track as this chart shows. For 2018, we expect a margin in the range of 6.1 to 6.5%. 4 factors contribute to margin improvements. Firstly, revenue growth means we utilize our resources better. Secondly, our ongoing operational efficiency initiatives are paying off. Thirdly, selling more services also contributes to better margins. And finally, we have a larger share of cost in lower cost countries. A more efficient use of capital has been central to everything we have done to improve our operations. 2 key metrics are shown here. Firstly, we want to tie up less net working capital in relation to our sales. And as the chart shows, net working capital as a percentage is trending down. We expressed a target of below 20% and we reached this target in 2017. Even so, we think it is possible to drive the percentage a little lower. The second metric is cash conversion cycle. This is, simply put, the number of days it takes us to go from paying for input from suppliers to payment from customers. This key metric used to be around 100 days. We set a long-term target of 50 days. In 2017, we were at 61 days, and we target 55 days for 2018. Tying together higher profits and more efficient use of capital in our operations means improved return on operating capital. This metric was not satisfactory, and we set an ambitious goal of 25%. As the chart shows, we are closing in on the target with 23% last year. We also wanted to make sure that we actually had cash to pay out to our shareholders. That meant we had to focus on free cash flow. This metric has improved substantially for two reasons. Firstly, the increased profitability. Secondly, the improved operations and capital efficiency. We have invested and will continue to invest at this level, primarily in automation and robotization, to stay competitive and efficient. We therefore see solid free cash flow going forward. We have not given a specific target for this, but for the coming years, we see a general trend of higher free cash flow than the current level, although there will be variations from year to year. A brief look at our balance sheet will also indicate that we have the capacity to combine growth and dividend payments. Our net interest-bearing debt has declined, both in absolute numbers and compared to EBITDA, while the equity ratio is very comfortable. This means we have the capacity and the willingness to pay solid dividends. When deciding on the annual dividend, the company will take into account the company's financial position, investment plans, as well as the needed financial flexibility to provide for sustainable growth. For 2017, our proposed dividend reflects the clearly improved free cash flow and the company's commitment to total shareholder return. In line with our commitments to total shareholder return, we have changed our dividend policy. Kitron's dividend policy is to pay out an annual dividend of at least 50% of the company's consolidated net profit before non-recurring items. With that, I hope that I made clear that in terms of financial numbers, we are definitely staying on track towards our 2020 ambitions. I would then like to hand over to Peter for some closing remarks.
So, in summary, we have delivered on our ambitions as documented by our financial reports. We're also on track for the last 2 years of the strategic period, until 2020, as indicated by market demand and the outlook given today. Our operational platform is much stronger. This includes our strategic partnerships with preferred partners, as well as a common operating platform and excellence metrics for all Kitron sites. Our CapEx is heavily focused on robotics and automation, as demonstrated by the 30 million NOK investment in a fully automated line in Lithuania, now operational. On top of our traditional business, we're increasingly focusing on innovative services with the potential to create new growth and increase margins. And finally, I'm excited to share with you our plans to expand in Eastern Europe. This is built on the strong demand we see going forward and the success we've had with our Lithuanian operations. Thank you for your interest in Kitron.